So I'd like to invite up onto stage now, as we have our chairs in place, Marcelo Gigliani from Apex Digital, Gonzalo del Pozo from Tadium Investments out of Spain, and Hanna from the PropTech Group and an investor out of Australia. So just grab a seat, any seat you want, and we're going to have a bit of a chat. All the questions I sent you before we've sort of asked and answered already, so we're going to dive into this from a slightly different perspective. You've all invested into marketplaces over time, and Marcelo, I'm going to warn you, you're going to go first, right, in this. What I'm interested in is when you think about an investment thesis today, what are you primarily looking for in terms of marketplaces?
So that's like a question that I could talk about for 2 days, but I'll try to keep it short. So we've been investors in marketplace businesses for quite some time now, and have invested probably about just under $5 billion of equity in I think now the latest count is 14 investments across a dozen or so countries. Our thesis historically had been pretty consistent, and it was around coming into leading businesses that are seeing all the network effects and being able to help them go farther faster by improving product, by driving additional engagement both from supply and demand, driving monetization afterwards, and getting deeper and deeper into the workflows. That was the approach we have been taking until now. We continue to take that approach, but for the first time in a long time, this question around AI is making us rethink some of the more fundamental premises of what makes these businesses great businesses. And if I were to summarize it, because of the virtuous circle dynamics, companies that are leaders can become stronger, and that creates barriers to entry, that creates pricing power, and a lot of that is generated by the ability to aggregate this massive amount of supply, which drives the demand and vice versa. In a world where AI, or generative AI, which has very clear near-term opportunities for these businesses, but also more medium-term uncertainties, it really opens up a new fundamental question around, does this network effect business model sustain in this new world of generative AI? I don't think there's a risk of companies, strong marketplaces going away. So to the point around disintermediation this morning, I think that's probably a low risk, but does the fact that there's groups out there that can suddenly aggregate massive amounts of supply and already are demonstrating that they can aggregate massive amounts of demand in the case of ChatGPT and Bard and others, does that suddenly make for this question around the network effect and the pricing power be less clear? If that does manifest itself, and obviously it's still early, but then that goes to the real reason for why these companies are great companies. And if you address that, or if you undermine that, you're looking at a situation where the predictability of revenue is not as high, the margin profile is probably going to be lower, and therefore the multiples are going to be significantly higher. You're exposed to significant multiple contraction. So all of those are things which are now becoming more and more important parts of how we think about investment theses today.
Okay, so Gonzalo, you used to run the Marcelo Group, so lots of aggregation of content in that now, but that was in when it was sold about 3 or 4 years ago to Lifeline Japan. But you're also an investor in this space. So when you think about, if you're at Marcelo this today, right, and you're sitting with AI in front of you as an opportunity, how would that change your thoughts about what you could do with the business?
Well, in that particular business, remember that the content was critical, right? And I also think that one of the things that we haven't talked about, but it's important, is I think at some point, especially in Europe, there will be some regulations, right? And regulations. So, for example, content was, like 15 years ago, portals thought that content, they own the content. Well, they own the content is not owned, and you can see that in other verticals like fintech, for example, no? Where PC2, PS2, whatever it's called, it has opened the content, because the content at the end of the day belongs to, if I'm selling my house, so it's my house, it's my content. It's not the portal's content, it's not that. So aggregating all that content back then was an issue. Now it's a given. I mean, so that it changes a lot. AI, now it's called AI. I mean, I graduated from school 30 years ago, and we were already doing that. I mean, we were doing neural networks. I mean, which is the base of the mathematics of AI. So it's just the complexity has now is just is the ability to have much more computing, ability to be able to deal with much more data at the same time, etc., and in real time. So it clearly will impact, because generating content, generating unique content, the way we now generate unique content with AI, it would be great to have that tool back in 2010 or 2000. Would be great, which back then it was not. That technology was not available, like to create content, like unique content on the fly, right? That was not available. So that I guess it would have. But now it's also creating opportunities, as Marcelo is saying. No? I think there are going to be providers that are going to be able to at least create opportunities on doing things slightly different thanks to the new technologies that we're seeing. No?
Could it change the role of a traditional marketplace? If you think about it, they sort of have the content. They can then do whatever they like with the content. But from an AI perspective, the AI could go out and find the content, do a lot of what Matula manually did historically, but do it.
We've seen this morning that, I mean, the AI as the technology, forget about the tools. I mean, it's internal AI, you have a data science team, and you're doing things. It's all about, so first of all, you need the content. So in order to do that, back in our days, we had to, from scraping to asking for the content, etc., having a lot of problems, as I said, because portals thought the contents belonged to them. They still think, marketplaces, they still think, while in many other industries that's a given. I mean, the content. So, and we are going to be forced to have open AI, like content for everyone. So and whoever is smart enough can make it the best out of that content will have provide some value to the marketplace industry. Yeah. So yes, I think it will change. I think it's going to change somehow, but I don't think the fundamentals are going to change.
Okay. Now, Joe, you've recently sold the PropTech group in Australia to MRI. You were a major aggregator of content, but through a CRM type business. How does AI in particular change the way your end customer was real estate agents? How does that have the potential to enhance what a CRM would be doing and change the way in which real estate agency does business? Because they don't want to then explore how that then comes back to the role of the marketplace.
Yep. Well, I think if you consider a traditional marketplace in the context of real estate, a property portal, the user experience is really great until they click the contact agent button, and then it falls away. So ultimately, the main driver for us to get into the CRM business was to help improve the experience of the end consumer, the customers of our customers being the real estate agents or brokers. So fundamentally, I think where the role AI really plays is in that conversational piece. So a lot of the heavy lifting over the conversation back and forth between an agent and a consumer about their needs. What did you like about this product or this property that you viewed? What are the things that are important to you? So progressive profiling of that customer, where they can talk to a machine rather than a human to collect really important data, feels very responsive, feels genuine. It means that our customers, in the real estate agents, can get this amazing data and do some predictive matching, provide a much better service for the end consumer. Ultimately, I think the opportunity is around that consumer experience post-digital, but the offline and online world, kind of the convergence of two.
Because one of the things about AI that has the capacity to do that we couldn't really historically do was find connections in data that are not obvious. Now, clearly in medical type industries where you want to find the connection between a low calcium level, it's something over here, and those two no one ever really put together. I get, but do you see does this apply to the marketplaces industry? And if so, does the AI replace the role of the marketplace and maybe put more power directly into the advertiser's hands? How do you think about that? Because it's got to disrupt the industry somehow that we haven't really thought about it.
Yeah, that's what I was referring to in the beginning, which is because content is freely available, historically, it was much harder to aggregate it and have that critical mass. Today, it's much easier. So I don't think it's a question of the marketplaces being disintermediated because the content is freely available. The marketplaces need to adapt their game to become much more embedded in the workflow of the advertisers, to be able to do things which the AI platforms and wherever they get to will be slower at doing. So whether that is expanding into software tools, whether that's expanding into other managed service offerings, which Bard won't be able to get to. I think that's where the next evolution is going to really force the leaders to go. The question there is, will the leaders be able to? In my mind, will this be another situation of an innovator's dilemma, where the established large groups are not the ones that are able to most quickly adapt here, and now there's a leveling of the playing field where new players can tap into the fact that ChatGPT or Bard or whoever comes next already can provide you that vast access to supply and content, and you layer on top of that, and suddenly you have an offering that's more easy to compete with some of the legacy players.
Do you envisage a world where I'll have my own personal AI-driven agent that I ask any question to, and it learns really deeply about me, and everything from I need a new car to can you do my weekly order from Whole Foods, right? And if that's the case, is that then replacing the role of the marketplace? Because it then will go and search for me. Oh look, I need a new house. I've got to be 30 minutes from this new job I've got. Wife, 3 kids, and I've got, I don't know, $3,000 a month to spend on rent. Find me the answer, right? Do you see that? Is that the role of the marketplace to provide that, or is this something that sits on top?
I think it's something that sits on top. I mean, if you go to Jonathan's presentation from earlier, kind of bots speaking to bots, if you consider the opportunity for a marketplace to enhance the experience for a consumer, and you mentioned earlier making matching of criteria versus reality. The challenge historically for portals and marketplaces has been, how do you ask the question to a consumer in a meaningful way that isn't a check of a checkbox or a widget that you need to run through. Generative AI now gives the ability for us to ask meaningful questions in natural conversational language to consumers to understand their needs in a more kind of precise way through inference. So the opportunity, I think, is to add that layer on top as a new way of engaging with the marketplace that could then talk to your personal AI assistant. So I don't think it replaces marketplace. I think it creates an opportunity to enhance the experience on marketplaces.
Plus, I think that we also need to take into consideration that the consumer is changing. If I think about my children, which in 10 years' time, and we're talking about the next generation, no? In 10 years' time, they will be the ones looking for a car, they will be the ones looking for a house. They just don't want to look anything. They just want to be told what to buy. So you know what I mean? The new generations, they want to be told what to buy, so they have to. There's a difference between search. I mean, marketplace as looking for something, but what I do see is that the evolution would be something like, you're not going to ask why, because it's going to be a machine that is going to tell you these are the 3 options of the best house you can buy. Period.
Based on what we know about you, this is what you need to do.
Based on that, but if I think about the new consumers in 10 years' time, I don't know. I think that's going to be the greatest revolution. That is, for them, it will be okay, because that's what they want. They don't want to spend time. They don't want to spend time. They don't want to. They rely on technology for everything, no?
And they don't problem solve.
And they want the problem solved.
Yes. So, but then this must then raise an interesting question from an investment perspective for you guys. If you look at, and we'll take a right move as an example, only because it's an easy example. Because when you're sitting on a 75% EBITDA margin, innovation is not something that really pops to mind, right? You're sitting there thinking about how much can I put up my prices next year, and then I'll come back to the office in 6 months' time, because that's a pretty easy process, and because you are so well embedded in the market. But if the hypothesis is true and the consumer dynamics are changing, and you're going to have these bots operating at both ends, right? Mm-hmm. Operating on my behalf and operating on behalf of the portal or the marketplace, how do you think about where to invest the next? And you've invested whatever is billions, right, into this, the next chunk of money. Are you still investing in the people who are thinking in the old dynamic, or are you starting to say, well, no, I'm thinking people who are thinking about the problem fundamentally differently?
Well, it's the latter, but it's the latter for a number of reasons. You know, the 70% margins that Rightmove has are a function of the fact that it was early and it was competing in a world where they were doing things which others couldn't do, they couldn't match, and that allowed them to drive that price. And that when that lever starts being reduced, whether it's through AI or through other types of automation, it very quickly exposes you to downward pressure there. You know, we don't know how this is going to evolve. This is a brand new category. Actually, I was talking to my partner who's out there somewhere, Steve Kuyers, who spoke at Autos Buzz last month. You know, today we've been spending all day talking about AI, and apparently at Autos Buzz, which was a month ago, AI almost wasn't even mentioned. So that's how fast the world is embracing or facing this new dynamic. If you look at other industries which are more at the sort of early indicator side of things when it comes to generative AI, you know, we invest a lot in tech-enabled services companies. These are outsourced software development groups where generative AI has a very near-term impact. What we're seeing there is there's about a 30 or 40% improvement in efficiency within these IT services providers, which one would think that's great for margins. You're reducing your cost base, you're being much more productive, and that is great until some of the players in the space begin to transfer that savings onto the customers. And then suddenly you're facing what these companies are facing today, which is a race to the bottom in terms of rates, because you're looking to buy share. You're looking to be the first mover to acquire share. That is something which we could begin to see more of within Marketplace.
Now, and in this case, you're talking about AI generating the code.
Correct.
And replacing the programmer.
Right.
In the process.
Yeah. And here we're seeing, for certain aspects of different marketplaces, and some of them see this as a bigger cost item than others, but the easiest way to think about it is copy, you know, content. We looked at a more of an event-focused managed marketplace recently, where a significant amount of what drives conversion is tied to the effectiveness of the copy, of the content that you're writing. And you have effectively editors who are putting very, a lot of thought into developing this content. Now with generative AI, they're able to get 5x the productivity and drive 20% better conversion. Pretty transformational thing, and this is something which started about a month or two ago that they began to put this in place. So it does have these really, really transformative impacts on costs, or could have this impact on costs and on revenue, which early movers are going to be able to leverage, and it could create one of these situations where you see a real bifurcation between the haves and the have-nots. And so I do think it's one where companies like Rightmove, unless they're leaning in, and historically these industrial revolution type step function changes haven't favored the incumbents.
No.
So one could take a view that there's more headwinds than tailwinds.
Okay, we've sort of talked a lot about AI, but there is more to life than AI. Okay, so when you think about these next gen marketplaces, do you see any evolutions or changes in the underlying business models? Who wants to have a crack at that one?
I'll go. I do. I think, and AI is a part of it. It's all about efficiency of match, right? So if you think about the traditional REA, realestate.com.au model, which was essentially newspapers pay for space in a physical newspaper, transitioning to paying for virtual space on on a computer screen or a mobile screen, that business model, demands that you show people not necessarily what they want to see, because it's a pay per list model. The whole emergence of AI or this kind of matching, show me what I really, really want, kind of goes against that model. I want to see, and Mitchell was a big part of this. I want to see the property that I want, or the car that I want, or the job that I want, or the dress that I want, in the least amount of clicks with the least amount of effort. Ultimately, that then means that the world's got to move towards performance-based, much more than pay per list, which then opens up the door for transactional revenue streams. So I think that evolution, which clearly we've seen from today, is well on the way, would just be accelerated through all these tools and technologies that we're seeing enter the market.
So that can fundamentally destroy business models for the advertising-based business models, which is all about not really giving you the answer that you've asked for, but I'm going to put in front of you the answer that people are paid for.
But yes and no. I mean, I think we have to differentiate it between two types of advertising. I guess you have the what we call, I mean, the REA, for example. The really not, well, REA is a different story, but portals like, or marketplaces like, I don't know, a lot that we know, no? That they're not really interested in matching, because their business is advertising. I mean, their revenues is advertising, so they're not very interested in matching.
So
but
the more inefficient they are, the happier they are.
Exactly. Yeah. So why would you?
Yeah, generate more leads.
Yeah. Why would you? So, but then we have the other. So I do agree with Malcolm. Like this morning was saying, we will see more increase in C2C. We're going to see more increase in C2C because as technology becomes more available to everyone, why would I mean, there will be other ways, marketplaces where I can sell my car or buy my car or sell my house, and also including other technologies like Apple has announced this whatever, super expensive. So virtual reality, other technologies will be effective, changing the way I see in 10 years, the way, especially consumer to consumer, deal on a marketplace type of, if we can call it like that.
Yeah. Can we bring up the Slido questions? I'm going to go back to the thought I had before around, because I'm not convinced that there is a future for marketplaces as we know them today. And if this C2C is truly what it is, it's just about, I've got whatever it was, the yellow car that was up there before, right? You've got a yellow car and you're happy to sell it to me. And all the marketplace is doing is finding a way for you and I to meet.
Yeah,
Okay,
that's
right?
the idea.
Now, if I've got a bot that does my job and you've got your own personal bot that does its job, and the thing about these bots is they all know about each other very, very fast, because everything, they learn one piece of information and suddenly 10,000 all know the same information. We just got to find the way to connect. Do you need a marketplace for that?
Again, it's going to depend. I mean, marketplaces is too broad. I mean, I don't see having my own bot telling me you're going to move to that house. No, I don't see it like that.
But if you know what you want.
Probably he, she, her, or whatever, probably know more than me of what I want. Still, I don't see it. But in other categories, within marketplaces, yes.
So it does make an interesting question around what you invest in, right?
Yeah.
Are you investing in the marketplace, which is traditionally a way in which we all came together to find the thing that we're looking for, but we didn't know where to look. But if you now get this matching or this connection occurring very fast, then do you need a marketplace? And that's, I think, something that will eventually, I think, emerge over time. Let's have a look at a couple of these questions. How do you view the effects of communities, the social media dynamics, in purchasing decisions of younger generations intersecting with generative AI in marketplaces? Marcelo, do you want to have a crack at that one?
In purchasing decisions, younger generation. Yeah, well, I think Gonzalo covered a little bit that certainly there are changes in the way younger generations are engaging with all types of purchasing, whether it's a car, a home, or the latest pair of sneakers. And social plays a huge role in that. And historically, we had seen it through the Facebook generation, through the Instagram generation, and now increasingly through the TikTok generation. I see it with my kids, and it's something which is for sure becoming increasingly relevant. One of the investments we made a few years ago is in a company in China called So Young, which is the leading digital marketplace for aesthetic medicine. Their social was an absolutely critical part of the value proposition there. It's a different market. It's one where cosmetic surgery is not seen as something to hide, but rather something to flaunt. And so this is a business which is addressing the younger female demographics. About 90% of the buyers or users of the platform were women under the age of 30. What they would do after their latest series of Botox sessions or eyelid surgery or nose jobs would be turn around and post it on social media. And it became not only a great way of generating original user-generated content, but also leveraging the virality of each person's social feeds, which again had all these virtuous circles. So I think it's going to be an increasingly important part of where many of these next-gen models go.
When bots meet and settle a deal, who curates and resolves the disputes? Okay, another bot.
Yeah. Well, I mean, this goes to the heart of the question over, what's the role of marketplaces moving forward? And I think the reality is, as a humanity, we have a distrust for our fellow man, and I guess that's where the marketplace comes in. To curate content, to do dispute resolution, or as a trusted brand to intermediate between two consumers. So I think it goes to the heart of the question of, will there be a role for marketplaces? My view is yes. I think there needs to be someone in the middle.
I think it's about trust. I think at the end of the day, it goes from being, here's a whole bunch of stuff. Some of the images are fine, some are fake, some are, it's a house or a car that doesn't exist, and it's bait and switch and whatever. That trust then becomes the real, what it stands for. And I know if I go to this place, what I'm buying is legitimate. It's going to turn up, and the image is real that I'm looking at, or the video is real, or the whatever. I think that's eventually what's going to happen. And the thing that I've noticed around the younger generation, which I'm talking kids who are 20, they don't want to solve a problem. They don't want to invest time in having disputes resolved. They just want it fixed. Okay, and they're happy to outsource the fixing to someone else, and they don't want
even if it's a third bot.
Yeah, they would.
For them, it will be.
And they look at crypto as sort of the future, where they don't have to deal with a bank, they don't have to deal with a call center, until you tell them, well, if you send the crypto to the wrong person, how are you going to get your money back? And they accept that as a risk. But operating in a world where things are far more efficient and effective. Question to you, Marcelo, I think. What do you think are the necessary factors for disintermediation of the intermediary to happen through AI?
I think we touched on several aspects of this, but if you think about, it goes back to the question of what is the role of the intermediary here. Historically, it was aggregating content, which is hard to aggregate. It was providing a great connection between buyers and sellers because there needed to be a place for them to meet. And it was about delivering more value over time to each of those constituencies to really cement your relationship there and get your tentacles into more and more pieces there. I think that last bit is what's most important. It's the ability to leverage the point of connection to do more for both sides. If you can do that, I think you're minimizing the risk of being disintermediated. Because the other aspects of what I walked through, massive aggregation of supply or massive aggregation of demand, I think it is much more disintermediatable in today's world than it was 6 months ago.
Okay. The third one down. If next-gen marketplaces are matching quality-led and transactional, is what Joe's saying, and incumbents are unlikely to move quickly, which is, Marcelo, what you're saying, how do new players scale and win? Anyone got an answer?
Well, I mean, it's again, this is where content becomes more relevant, right? So at the moment, the incumbents can going to move at their own pace because they do have the content. If we look at it in my context, given my recent history in CRM world, for instance, so we had a 55% market share in Australia. So for us to introduce, as in PropTech Group, to introduce this technology would be easy. For a pure technology player to introduce it, then it becomes a collection of how do you get the bots to speak to other bots. So, the reality is the benefit that incumbents have is data and history, trust and content. In order to replicate that, it requires you either to go to 100 different websites, individual websites, and try to aggregate before you can create this layer on top. So that aggregation,
But
yes, whilst it's disintermediate, it can be disrupted fairly easily, is still a competitive advantage because you're buying some time.
But Mitula, for example, we were aggregating, indexing, updating, whatever you want to call it, 400 million ads per day.
Yeah.
Okay? Then in 54 countries, I don't know, 20 languages, whatever. Then we had, I can't remember how many unique visitors per month, but it was a lot. So we couldn't afford it. I mean, back then we had some of these technologies. It's just that we couldn't afford to apply these technologies to be able to provide a unique, to be more efficient, as Marcelo was saying. We could be much more efficient applying what AI, what we know now by AI. The maths were there, and the technology was there, but we couldn't afford to, right? So the way I see it is, yes, the innovation can come from anyone now, thanks to the technology. It's available for everyone. If you all you have to do is just sign up for an API in GPT and provide unique content for each person that visits your sites. Which is, that was insane 10 years ago.
So then the big investments all around brand building, I would think, in the future.
If we believe that technology is going to keep being available and affordable for everyone, the way it has been, yes.
Okay. It says, aren't we moving into a conversational marketplace world? Users will use voice to device for searching for almost everything. Who's going to be a gatekeeper?
Mm-hmm.
Well, my view on this is ultimately it goes back to the marketplace, right? So that conversational AI will be between a person and the marketplace. And again, for me, it just reinforces the need for the marketplaces to advance this technology and own that customer relationship. So the gatekeeper will be the tuning, I guess, of the AI tools owned by the marketplace. So for me, the big shift is, conversational AI is now a thing that is easier to do. And Gonzalo's point is a very relevant one because we did look at this in Mature. The computational costs of trying to do predictive modeling within our world was so previously expensive. Now it's a lot easier. You can tap into an API. Where the real value comes from is your data being seeded into this API and being able to control the responses of that AI. So for me, all roads will lead back to the big players in getting better at providing this technology to the end consumer.
Okay. Probably last question is, next gen marketplace will be an integration layer between different providers of data. Data of what is to be of sold items will automatically be added for digital ownership, which I think is more of a statement than anything else.
Yeah.
Wait, Bard. I got to say thank you for Bard for joining us, but it couldn't even ask a question. Room for improvement. Okay, so I think when we start to think about wrapping this up in terms of this conversation, what we know is going to be critical is that there'll be lots of... Actually, I've got a question about bad actors. We always talk about in a positive way, right? That people are going to be, it'll improve the quality of content, etc. But we've already discovered, not discovered, but talked about today about hallucination, and that's the AI sort of getting ahead of itself. Okay, but then there are people who are going to feed wrong data, bad data, and purposely use it for nefarious things, and we see that all day, every day. I don't know about you guys, I get spammed heaps with click this to get money back and whatever. how do you think about this as an issue for the future? Because AI is not always going to be for good.
It's not, but I also think it's, we are on day 1.5 of the life of what we're seeing today. It's still very, very early, and everything we're seeing now will, every time there's a problem identified by technology, technology comes around to address that problem. So I think we're going to continue seeing more of that. The hallucination rate will decline, the fraud, the ability to catch fraud through the good AI will continue to improve. So I think it is something we need to
Yes.
continue seeing play out.
Yeah, which I will add that even though I hate to say this, some sort of regulation wouldn't be bad at this point.
Yeah.
Maybe not maybe not what we know more about
But
it.
do you think that's a European perspective?
It's probably a European perspective, yes.
Where you're far more comfortable in a regulated world, where I can't imagine the US, they want to roll out more regulation, okay? And I think that's where it's going to be a slight dilemma. And I think it does go back to one of the questions that was raised earlier. Will the regulation slow it down? And I don't necessarily buy the answer that if it's good, they'll allow it to keep going.
I think they'll slow it down. I think they'll purposely slow it down, probably because of bad actors and the rise of kind of scams or AI-generated scams. But that's maybe not necessarily a bad thing.
Okay. Or do you think they'll slow it down because governments want to control it?
I'm not sure they can, to be honest with you. I think it's going to get away from them regardless.
It's based on an open architecture. It's going to be very, very, very hard to control. That's the whole premise of what makes it so powerful.
So we're entering a brave new world. We truly are. And the interesting question is this, and my last question actually is, do you think this is, we think about print to digital was the major change. If you think about over the last 30 years, yes, and having gone to digital, it's sort of been incremental changes after that. Is this the next big change, equivalent to the print to digital phase?
I personally think it's larger. It's bigger than the print to digital transition. If we, and I say this not just as it relates to marketplaces, as I think about what artificial intelligence in these newest forms has the potential to become, we see this as this is bigger than the internet. This is something which is fundamentally going to redefine society as we know it, and it's not going to mean that the machines will take over and robots will come in and kill us, but it does mean that it's going to need to see society adapt to this brave new world, which is going to create massive opportunities, but also the need to adjust.
Yeah. Plus, print to digital created massive opportunities, but it was from a simple way. I mean, it wasn't rocket science.
No.
No, this is.
Yeah, and it was the same business model, essentially. Yeah, I agree. This is significant.
Well, on that great note, we should all have a drink. So, luckily, it's drink time. So thank you very much to the panel, to Marcelo, Gonzalo, and Joe. Thank you very much for sharing those thoughts. I think it's a fascinating conversation, so thank you.